thousands of carers across the UK are losing out on over £2,000 a year because they don't know about a little-known rule called underlying entitlement. Even if you're not getting paid carer's allowance, you could still be entitled to extra money that adds up fast. Most people think if their state pension is higher than £83.30, there's no point claiming carer's allowance. That's completely wrong, and it's costing carers a fortune. Hit that like button, subscribe for more benefits advice, and comment below if you're a carer who didn't know about this. And here's what's at stake. If you don't claim carer's allowance properly, you're missing out on something called underlying entitlement. This isn't just a technicality, it's a golden ticket that unlocks extra money in other benefits you're already claiming or could start claiming. We're talking about the Carer Premium or Carer Edition, worth £46.40 every single week. That's £2,412.80 over a year. In this video, I'm going to show you 4 ways underlying entitlement can boost your income, even when you're not receiving a penny in carer's allowance payments. Plus, at the end, there's a game-changing insight about national insurance that could protect your state pension. The first thing you need to understand is what underlying entitlement actually means. When you claim carer's allowance, the Department for Work and Pensions checks if you meet all the conditions. If you do, but you're already getting another benefit like state pension that's worth more than £83.30, they won't pay you the carer's allowance. Instead, they give you something called underlying entitlement. It's basically official recognition that you're a carer sitting there in the system. This recognition is incredibly powerful because it acts as a passport to other financial support. Once you've got underlying entitlement sorted, here's the second benefit. If you're claiming pension credit, your payments will automatically increase by £46.40 per week. This extra amount is called the Carer Edition. Even if you weren't getting pension credit before, underlying entitlement might now make you eligible for the first time. That's because the system recognises you as a carer with extra costs. Your pension credit calculation changes completely. Many carers find that they suddenly qualify for pension credit when they thought they earned too much. The third benefit kicks in with housing benefit and council tax support. And if you're already claiming these, underlying entitlement to carer's allowance adds the Carer Premium worth £46.40 to your weekly payments. And if you're not claiming them yet, this could tip you into eligibility. Housing costs are massive for most people, so getting help with rent or council tax makes a real difference. The beauty of this system is that it stacks up. You can get the Carer Edition in pension credit and the Carer Premium in housing benefit at the same time. And now here's where it gets even better. The fourth benefit, if you're on universal credit, you can get the carer element worth £201.68 every month. That works out to roughly £46.54 a week. You don't even need to receive carer's allowance payment to get this. You just need to meet the caring conditions, 35 hours a week, caring for someone getting a disability benefit. Tell Universal Credit you're a carer, and they'll add the element to your monthly payment. And this is separate from any carer's allowance you might receive. Here's the resolution that brings it all together. Carers who claim underlying entitlement are seeing their total income increase by hundreds of pounds every month. One woman claimed carer's allowance at state pension age, got underlying entitlement, and her pension credit jumped from nothing to over £37 a week. Another carer found their universal credit increased by over £200 monthly just by reporting their caring role. The transformation happens fast once you make the claim. But here's that game-changing insight I promised. Every week you have entitlement to carer's allowance, whether you're paid it or not. You get Class 1 national insurance credits. These credits count towards your state pension, protecting your retirement income even when you're not working. Most carers have gaps in their national insurance record from years of caring. These credits fill those gaps automatically. Over time, this could mean the difference between a full state pension and a reduced one. That's potentially thousands of pounds every year in retirement. Like if this helped you discover money you're entitled to. Subscribe for more hidden benefits advice, comment which benefit you'll check first, and watch our next video on pension credit secrets.